All right, we want to start, Mike, on the money by taking a look at stocks today. All indicators down, although that big number still looks pretty good. The Dow over 41,000, NASDAQ still over 17, S&P 500 at 5.5. But today we really want to talk about how the presidential election, just 10 weeks away, less than that actually, and now the race is fairly even. We love to welcome Mike Giordano, our financial expert, financial advisor with Williams Wealth Management. But as we look at whether or not politics actually affect the markets and what that might look like in the next 10 weeks. Why was everything down today? Not big numbers. You're not worried about it.
No, this is a one-day type of thing. But you did have NVIDIA, which is, this big AI play. They reported numbers after the bell today, what their earnings look like. And so there was a little bit of trepidation heading into that. Like, what are they going to report? Because they've been smoking the numbers, and so there's a little bit of a caution as to how that would all play out.
Yeah, so caution, no fear.
Right.
Do politics have an effect, though? I mean, we look at party policy and that sort of thing. Does it matter?
Yeah, so, presidential years are typically good for the markets. The markets most years are up, and in presidential years, again, they're mostly up. That has played true again this year. We're up so far this year. The big thing coming now into these last 10 weeks up to the election is that you could likely see a lot of volatility because the markets will be trying to game out who do we think might win and then what types of policies might that person put into play. And so it's really hard to say definitively today how that's all going to play out. So you'll probably see a bunch of gyrations back and forth. And
on the political side, there are a lot of gyrations just about what each party's policy really is.
Exactly.
That might shape up a little bit on that September 10th debate. So historically, data is showing that economic and inflation trends tend to have more of a relationship with market returns than election outcomes do. So how do you advise your clients if they're the ones that are a little shaky about how politics might affect the market?
Yeah, this is a season that's so highly charged with emotions. And again, I like how you put that because we're talking about market perspectives, not necessarily political perspectives. Yeah. We're not political strategists.
No politics here.
No. So generally speaking, there's a lot of emotions around this stuff, but at the end of the day, the markets typically do well under both types of administrations, Republicans or Democrats. What they really like is having some sort of split government, because then you think there might not be that many policy changes and companies can say, okay, we can have a better game plan as to what we think is going to be the landscape that we're going to be navigating inside of. So in terms of the emotions, it's best to just treat all of this stuff as if you have that noisy neighbor or that friend that's constantly gossiping or telling you all kinds of negative stuff. And it might get you all riled up at first, but eventually you go, I know what to expect from this. I know they're trying to get me riled up. I can listen to it, but I don't have to take it all in.
I love it. So split. You're talking about like the White House is one party, and then the Senate and Congress might be different. There's a little more balance in there.
Both parties have control of one piece of government. That's what matters.
Yeah. And so in the long term, what are you advising everybody and our viewers to do? In the long term, just stretch it out?
The easiest thing to do is say you're a long-term investor. The harder thing to do is actually be a long-term investor, think through the long term. And so, as you mentioned earlier, earnings are what really drive stock prices. So as long as earnings are going up, that's what matters. So you want to be diversified. You want to have quality companies. You want to focus on your goals. This is like a marathon. You're running a marathon, and when you're running a marathon, you got to run all 26.2 miles. You can run really fast the first 8. It does not matter. And so think of your investing that way. You're trying to stay in the marathon. You're trying to be an endurance runner.
Excellent. We hear you. And don't listen to the noisy neighbors.
Yes.
Mike Giordano, thank you so much. Chris?